The dollar versus Swiss broke to the downside last week, and in doing so fell to the lowest level going back to 2011. That's a long time ago. I will talk about the technicals that are driving this currency pair, including that break, in this video, so let's get started. Looking at the weekly chart of this currency pair, go back in time to that 2011, 2010 area, and you can see that we did have a low here. We broke below that low, racing all the way down toward the 70 level, 0.70 level in the dollar versus Swiss, and then rotated quickly back to the upside, breaking above that level and not returning to that area until this point right here. I guess that's at 2023, and then 2024 we had a low price that came within or near this swing area right here. So a nice floor was developed, and when a floor is broken, it becomes a ceiling, and that's what happened in trading last week. The price fell below that floor, and we saw increased momentum to the downside. That low price came in at 0.8098 before rotating back to the upside. We're currently trading at 0.8222. What we know is that this old floor again becomes a ceiling, so we need to get above that 0.8333 up to 0.8373 level to increase the bullish bias going forward. If we can't get above that level, then guess what? The sellers are still in control. We may get a corrective move up toward this level, but if we can't get above it, the momentum would likely continued in a downward direction if once we break below the low price at 0.80987. So be aware of that dynamic and this key swing area up through here, which is now a ceiling. Taking a look at the hourly chart of this currency pair, we can take a look at the range that we saw in last week's trading. That range started with the price first initially finding resistance against what? The blue line right here. That's a 100-hour moving average. That gave the sellers a go-ahead to push lower, and we did through the week. We did have a corrective move to the upside right through here that took the price back above the 100-hour moving average, not once but twice, right through here before breaking again on Wednesday's trade, and this time really running away to the downside. That runaway to the downside did get below that 0.833 level. That's this level right through here. You can see the momentum through that level. So the sellers push to the downside. Bottoming out near the 0.81 level. It was really around 98 level before we started to rotate back to the upside. So what we know is that this 100-hour moving average is going to be in play. We also know the 83.33 level is going to be in play, and both of those levels are going to be near each other in just an hour or so of trading as the 100-hour moving average moves closer to that level. So with the price in between the low and the this 100-hour moving average 83.3 level, it's you could buy against the low right here, or you can continue the selling momentum, or wait until the price moves up toward this level to lean against that level. If the price were to move above it, then all bets are off. If the price stays below that level, again, the bias remains more to the downside. So it's up to you. This is not the best area to be a buyer nor a seller in between the support and resistance. But it's if you think the dollar is going lower, you think the Swiss franc is going higher. This is what's anything within this area toward, as the price moves up toward the 0.833 level, that's going to be a risk level for traders. So there you have it. Look at the dollar versus Swiss to kickstart your trading week in that currency pair. My name is Greg Michaelowski. Good fortune with your trading. Bye bye now.